crude oil, of course, is a market pulse chart. It's a futures chart, but of course, as you know from attending hopefully a lot of these presentations, there is a strong correlation between what happens in the futures market and what happens in the dollar index, and thereby the relationship these pairs have, since they are, basically we're going to focus on dollar-based pairs or dollar correlated pairs. Okay, so crude oil becomes a really significant part of that. Why? Well, just take a look here. Let me do a quick overlap. I'll put crude oil in the blue here. Okay. I'm sorry, crude oil is in black and the dollar index is in blue. I'm not sure if it's easy to tell that's blue or not, but let's clear this up a little bit. That ought to work. There we go. I don't know if that's any better or not. But when you take a look at the dollar index basically consolidating, you can see crude oil is also doing a little bit of consolidating itself. There's an inverse relationship here. See that? You jump out to the daily chart, it's even that much more visible, that much more obvious. Okay, so yes, the dollar index is a huge part of the Forex equation, but crude oil, of course, affects the dollar, and therefore it's important that we understand where crude oil is going on any given day. Strength in crude oil is going to be reflected by weakness in the dollar index. And you can also see, in this case, since we've been selling off like crazy in crude oil since July, take a look at the reaction, the strength, out of the dollar index. Okay, no market moves in an island, and these relationships back to the Forex market pulse, dollar, crude, Dow, gold, is evidence of that. So what I was talking about before is trading with the overall trend. If I know the overall trend, for example, on crude oil is down, and I zoom into, say, a 30-minute chart of crude, or a 60-minute chart, or some sort of intraday chart that I'm going to be setting up for a possible play in the crude oil futures market, if I was using the daily chart as a filter, as a determining factor as to whether I want to be a buyer or a seller, for a lot of people, following the overall trend and then waiting for the shorting opportunities on the shorter time frames, it makes a lot of sense. And I'm not saying that it doesn't have relevance, but that's the backbone of multiple time frame confirmation. Now realize, if crude oil is to reverse, the first place it's going to be evident is going to be those short-term intraday time frames. They're going to consolidate, or they're going to turn over and start rallying, and the culmination of those up candles on a 30-minute, then on a 60, then on 180, 240 will eventually, again, accumulate and create the uptrend or the bounce on the dollar index. So this dollar index is not going to rally from 55 and go through 60 without there being some sort of likely buying opportunity on the intraday charts. That's the canary in the coal mine. Okay, those short-term charts. That's your first insight that there could be a change.